You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. Welcome back to TWIFO, This Week in Futures Options, a program where the name pretty much says it all. We break down the week that was and is from a trading, trending, and analysis and on volatility and skew, all sorts of fun perspectives over there on the other side of the fence, the futures options side of the fence. My name is Mark Longo, and I am joined, as always, by my cohort, my friend / nemesis over here on the old program, the dark side to my light side, Mr. Nick Howard, the founder of Bantix Technologies, creator of a little program we like to use around here called Mr. Quick Strike, or should I say Quick Strike, Mr. Nick. Nick, welcome back to the TWIFO show. I'm going to start calling you that, Mr. Quick Strike. How does that sound?
I think Mr. Quick Strike, yeah, that's what I make my kids call me at home, Mr. Quick Strike. So,
may I have seconds for dinner, Mr. Quick Strike?
Purely for the quick strike part of it, not because I'm striking them. I don't want anybody to think that I'm a quick to strike them. That would be terrible. I do no corporal punishment at my house.
That got dark really quick. Wow, I wasn't expecting that at all.
Well, nowadays you got to watch everything you say. You got to be really careful of everything you say. So
you do have to watch everything you say. No, what else you have to watch, Mr. Nick, are the markets. And since you're my cohort, since our buddy Sean is off traveling, he's a busy man these days. They sent him hither and yon, so he won't be joining us with delicious burgers in the studio this week. But I know he's there in spirit. And since he's not here, Mr. Nick, what do you? Things are popping off in his neck of the woods in our absence, a.k.a. the equities. What do you think? Should we dive in there? We don't get a chance to talk a ton of equities on the show. We do a little bit, but this week, kind of hard to avoid, right?
Yeah, I mean, even though we tend to leave this to the end of the show, I think it has to be the lead given all the crazy things that happened yesterday, then overnight, and now again today. So, because today it looked like we were going to balance out a little bit, but it looks a little soft right now.
Yeah, we're kind of in that nebulous kind of teetering on the fulcrum there. Are we going to rally? Is it going to retreat? Is it going to be a little bit of both? We're kind of dancing on that kind of on that needle's edge, that tip of the needle out there right now. So it could move either way. Certainly has been a big sell-off, a pronounced sell-off in the major equities over the past few sessions. And, of course, as a result, a huge move in volatility, S&P volatility, a.k.a. the old VIX jumping. For all of you percent to percent fans out there, I know some of you love it, others hate it. Either way, 44% flirting with 23. We were talking with the low teens a week ago, so that's a big move over the course of the past week. Our friend out there, RVX, which is, of course, the Russell VIX, hitting about nearly a 24, 23.99, so still a handle higher. That jumping about 21%. Remember, RVX was already a little bit more elevated to begin with, so it didn't have as much room to run on the upside as a VIX did, which was coming from the low teens already and kind of just rocketed up. So interesting stuff out there. We've seen a lot of people talking, a lot of people hitting us up and just commenting about skew over the past week as well, Mr. Nick, particularly as it applies to the major equity indices. A lot of people talking about what we saw. They saw skew getting elevated for a while. They're out there in the S&P, then kind of coming off a little bit. Skew going into this sell-off was actually not as crazy as some people would have thought. They would have thought maybe a lot of hedging going in, leading into this event. We didn't see it. I mean, it was elevated, but nowhere near the levels it had been before. So maybe some people might find that interesting. In fact, speaking of skew, Mr. Nick, maybe as we dive into that discussion, let's have it led by a listener here. Let's cheat and bump up a listener question into the top of the show here. This comes from Bondi, one of those three,
or B and I.
B and I. Okay. Oh yeah, B and I. Yeah, there we go. See, you're good at this internet lingo there, sir. All right, B and I. There we go. Looking, he said he or she. I can't be he or she. You never know who's looking at this stuff. B and I could be a girl. You never know. Looking at Quick Strike right now. So whenever this came in, I think this was a little earlier. They says the front week E-mini skew is 35 over 23 on the put and 18 over 20 on the calls. So does that mean the put vol is 35 now, and it was 23 last week? Same with calls, 18 now and 20 last week. And they also want to know, does the capital mean above the at-the-money vol? Is that correct? Which looks like it was around 32 at the time they wrote this. I just pulled it up myself now. Quick Strike, by the way, listeners, you guys can follow along. CMEgroup.com/TWIFO to get the free version, or just log in over there, quickstrike.net. Or Bantix, BANTIX.com, any of those places to log in to get the full version. You can see exactly kind of what we're talking about right now. As we're looking at the E-minis right now, at the money vol, he's talking about that front kind of week contract that has 1 day to go. That's got an at the money vol of about a 36. And yeah, Mr. Nick, I'll let you take this because this is obviously your baby. But it sounds like they're maybe conflating the percent richness and cheap versus the actual vol, right?
Yeah, so that's actually a good question, and it's interesting to see how they phrased it in terms of the 35 over 23 and the 18 over 20. So basically, what you're going to see on that report in that quick skew column is you're going to see where things are currently versus where they were at the end of last week. So from a practical standpoint, you are exactly correct that it was now, well, I don't see the 35s and the 23s, but things have died down a little bit since I think this question got put out there. But that top put number, you're going to see that's kind of how rich the put is in comparison to the at the money. And you mentioned, you were correct. If you see a capital P, that means the put is more expensive than the at the money. And if you see a small P or C, that means the corresponding call or put is less expensive to the at the money. So yes, we had puts get firmer, and they're definitely not there now, Mark. I'm sure you're looking at it as well. In fact, I'm sure that you have a comment in here about the skew not as crazy as you would expect it to be. I mean, things are definitely softer from a put skew standpoint today than they were at the end of last week, which makes some sense in that, sort of the juice has been, let out of the container a little bit in that we've made our big move. So it would tend to make me think based on that there's not a big expectation of a continued hard slide. But then again, we're still down 60, almost 60 now here in the SPX so the ES is down. Oh, the ES is down 50. SPX is down almost 59. Yeah, I mean, we're moving down. So yes, the higher number means richer if there's a capital, and again, the higher number can mean cheaper if there's a small letter. But how you read it, and I will push a link to Mark, which he can tweet since he's the master of the tweeting for the show, that will explain quick skew. It's on the Bantix site, and it will give you an understanding of what the quick skew numbers mean. So you are correct in your interpretation, but I think things have changed since this note was out there, because all I'm seeing out even to the 30-day is that the puts are not quite as expensive as they were at the end of last week. So I'm sure sometime yesterday we can actually look and see how off they are. Let's look at one of these and see. Yeah, see, not too. Mark, it didn't really get too crazy, the skew. So.
That's kind of interesting. A lot of people thought it would have exploded. It would make sense as kind of coming in a little bit now because, we are a little bit selling off again, but we did kind of, once you explode down to that rich area, people take their puts off, usually, right? Maybe leaving some on today because we continued to move to the downside. Yeah, and I think they were talking about that front, which is pretty much a front day contract now. So that skew is going to be all over the place. Looks like it's come in quite a bit, even, right, since they wrote this, because I'm looking at the quick strike now. It's got about a 22 on those puts. So it's come in even since this question came in when it was a 35 rich on the puts there, 35%, of course, over at the money there, and a 23% a week ago. It's pretty much in line with where it was about a week ago now out there, at least in that contract that's expiring tomorrow. And again, you got to take kind of the term of skew with a contract that's going out in a day, kind of a little bit with a grain of salt. Things get wonky as you get a little bit closer to the fire there. But, if you go a little bit farther out, a few weeks or a month or so, you can start to see a little bit more about what's going on out there in skew lands. Maybe let's do that. Let's go out to let's go out like about a little over a month. Here's this contract that's going away in about 36 days. Looks like the puts are rich, but not even as rich as they were about a week ago. They were 28.2. Right now, about 27.4 out there. The calls were at a 21. The calls have come in 16.9 up there on the calls these days. Calls cheap to the at-the-money vol. Puts obviously rich to the at-the-money vol. Let's look here. Obviously, vol across the board is up, so we don't need to break that down for you out here. And in terms of, I'm looking here, by the way, you can do this yourself. If you're playing along in the Quick Strike tools, just go to that drop-down menu, choose the quick reports, choose your TWIFO report, which is, of course, this show. So that'll break it down for the week that is, or whenever you log in, it'll show you that from that date. You can play around with the settings if you want to see this exact day, which is, of course, Thursday, October 11th here. Heading into the big FIA show next week, which is crazy. We're already at that time of year, but that's a conversation for another day. And you pull up the equities and pull up E-mini S&P 500. You'll see exactly what we're looking at here. And in terms of where the paper has been this week, first off, OI pretty hefty this week, up nearly 16%, which is saying a lot for a contract that already trades a ton, Nick. It's not like the the E-mini is a shrinking violet, right? This is not fluid milk. It trades a couple of contracts a day, This is the E-mini S&P. This thing lights it up on a quiet day. So increasing open interest by about 16% is a lot of paper going on out here in all things. And if you do what I do, Nick doesn't like doing this. I like doing it this way, listeners, which is I look at all expirations on a product like the E-mini or maybe like the Eurodollars. It can be a little bit overwhelming, so maybe Nick's view is the better one. But I like to see the full panoply at a glance. Sometimes, warning, it could be a lot. But it's also good, I think, to see the full breadth out there what's going up. If you do that, you'd see that actually a lot of action on the Nove upside, kind of leading the dance this week. It was the 2920s. Right now out there in the E-mini, we're at 2770 after the sell-off. So 2920, it wasn't too far in the rearview mirror. It wasn't too far out of the money. It wasn't too far away. And yet now it seems like it was forever ago that we were even threatening levels like that. 2920 calls with 52,000 hitting the tape this week. Looks like the lion's share of those going up yesterday, 32,000, 31,000 of that opening, which is kind of interesting, and about 20,000 hitting the tape today. I wouldn't have guessed, Mr. Nick, in yesterday's massive sell-off that the big trade in the E-mini would have been a pretty decent out-of-the-money call with about 50 days to go. Would that have been your first choice for yesterday's big trade, Mr. Nick, or this week's big trade?
No, I guess, yeah, I'm looking down here at that was, again, it might be a function of them thinking that they can put something on as part of a 1x2, right? Buying one that's up a little close to where we came from and selling two a little further out because when you never get there. And if we do run up there, it's going to get hammered. So, but yeah, I mean, who knows what people are thinking, but that's a long way off now that where we just came from. So unless somebody was capitulating some stuff that they had, but it was an opening because we're seeing that the open interest change by quite a bit. And I think you're talking about the D's 3050 call. Is that what you're saying? Or which one?
That one too. That one's coming in right behind it. I was looking at the 2920s, which did 52,000 there in, November. But the D's are also rocking. 30 half calls doing about 23,000. Also worth noting, right behind the number ones were the 2960 calls, also in November, with nearly 30,000 of those going up also on Wednesday. So maybe a little bit of a vertical going up that day as well. Could have been a 2920, 2960. Would seem odd. Those two would be the number one and number two. So probably a vertical or some sort of ratio going up on those two strikes. Hence why those two are leading the dance out here this week. Miss Nick is right. The 30 half calls in D's. So a lot of upside lighting it up in the E-mini this week, which is probably not a lot of people's first thought for what we would see, but not to be outdone. There was some put action this week. It was back in our old friend, the contract that's going out tomorrow here with 1 day to go. It was the 2,800 puts fighting up nearly 30,000, 29,000 and change this week, coming in right on hot off the heels of the other calls, doing with lion's share, surprise yesterday, 15,000. That's kind of more in line with the paper I was expecting. Big sell-off, near-term downside activity, probably going to lead the dance. This week, not so much. Maybe we got some optimists out there looking for a pullback in the E-mini, a relatively near-term pullback as well. Maybe you got people, talking about post-midterms, rallies, things like that, taking advantage of a little bit of a discount on the upside to do just that. Either way, but people were playing in the puts out there as well. It was about 29,000 of the 2,800 puts. Looks like some closing out there, about 3,000 net closing, which is kind of interesting. And then 15,000 of the 2,700 puts, which are nowhere near as far out of the money as they used to be either, given the recent activity out there. 15,000 and change of those hitting the tape today, a total of 27,000 going up this week. Also kind of slightly biased towards the opening, but not a ton out there. So crazy stuff out here, Mr. Nick. Everywhere you look, skew perhaps not as crazy as we thought, but other things were. Anything else catching your eye in equities land, Mr. Nick, before we keep rolling?
No, I mean, I think on this front contract, you might see some of the open interest on these lower strikes, people trying to roll what maybe stuff that they were long and roll them into lower strikes, taking something out of the premium that they, because I know I did talk to some people that were doing some SPY puts and were taking those and rolling them down to 2,800s down to like the 2,600s and stuff like that. So a lot of this lost open interest in the 28 could be profit taking and then rolling it down, but further. But nobody really people pushed them down pretty far on some of these increase, like 2650, 2600s. I don't think we ever really got close to those. So, and I think my only comment at this point would be like after we bounced in the morning and came back, I thought we might stabilize, but this makes sense that we would get a little softer as the day goes on. But it doesn't feel like it's that broad of a on the stuff that I'm watching. Those individual stocks don't seem to be down all that much there. So something's driving the big move down. I'm not sure if it's just a couple that are getting hammered or if there's just a broad market sell-off, because it doesn't feel. I mean, the stuff that was valuable, that was at value, is probably still at value, and it's probably better buy than it was. So it will be interesting to see how much this carries on, not just for into the close, because people can get squeamish into the close, but then overnight. Did you watch overnight how it just got annihilated overnight?
Yes.
The ES and the NASDAQ, and then and that bounced right back. So if you were paying attention overnight, there was an opportunity to make some money or get whipsawed pretty good on that. So, but no, my only thing would be that I'm just surprised the skew's kind of soft in comparison. But again, if you go out farther, it hasn't changed all that much.
Yeah, that's kind of what I was expecting, maybe a little bit of a retracement today, given the fact that everything else we're seeing, right, the skew isn't as bid up. We've been polling our audience here this week. We asked them once this started popping off, we said, are you guys buying this? Is this the new norm for volatility out here? Or are we kind of seeing just a little blip? So we use the shorthand for equity volatility, a.k.a. the VIX, which right now is hovering, I believe, north of the 20 handle still. And we asked them here, at the time it was about 18.5. We said, hey, where do you think we're going to be at the end of the week? This was a few sessions ago. Are we going to be right around here, 18 to 19.5? We're going to be a little higher, so north of 19.5, which is where we've been for a little while now. Lower, so 16 to about 18 or below 16. And with 38%, the lower 16 to 18 range is still winning. Some of that could have been biased by the early voting, but a lot of people haven't been pouring in after the fact to say, above 19.5, which I thought a lot would when we were living in the 20s there. It seemed like that was a no-brainer. But c'est la vie, we got about a day left on that poll if you haven't voted over there at options to make your voice heard. Mr. Nick, one more thing here before we keep rolling. We got so many products to get to today.
Yeah, the only thing I'm going to try to take a look and verify it. It almost feels like vol really wasn't up all that much, and that the curve just really sort of slid along, right? Just sort of slid down in its same shape. So I'm going to try to look at this really quickly and see if I can eyeball this. Because where did we start? We started second here. So is that right? 10.9. The futures were over here. It almost feels like all we did was the curve did not shift all that much. We just changed where we were located on the curve. That's really what it feels like, and that's what it looks like. So if you look at the curve from where we settled to where it is now to the 9th, the close of the 9th, there's really not that much of a shift of the curve. And I'll tweet this out real quick. So basically what we did is we moved from somewhere in the 28s down to the 2750s where we are right about now, and there wasn't that much of a shift in vol up. So really all we did was we did that kind of, I believe it's called the local volatility move. We moved along the vol curve. There was a little bit of a increase in the absolute, shift in the vol curve, but really all we did was slide the at the money up along the curve. So yes, at the money vol increased, but the shape of the curve and where the curve was in comparison to 2 days ago, not much has changed. So I'll put that out there and you guys will be able to see. And I'm looking at the 70-day contract. We're looking at the East contract. Let's look at, I think we're going to see that across the board. Let's try one more and then I'll push it out there. Anyway, that's kind of, that's what I always sort of suspect, right? I always wonder when the vol curves are shaped like this, is it really that much of an increase in vol, or is it just a change in this, in a location of the vol point because of moving at the money? And I think that's what has happened. over the last couple of days.
Moving along the curve rather than shifting it aggressively. Well, Mr. Nick, a lot of things are lighting it up. It's one of those cases was when the big sell-off happens, correlation kind of goes out the window. Everything all of a sudden just moves in lockstep pretty much, or I should say lack of correlation out there. So which other products, I'll let you pick next, Mr. Nick. Where do you want to jump next? We could talk rates, metals, ags, crude. What's lighting up your boat? Crypto, fluid milk?
Well, as much as I'm always the rates guy, I just don't even enjoy talking about it all that much, just because I think that tends to be a place where people that are listening aren't spending that much time playing. So let's go to what's my old favorite. We all
you love
know
the metals and you love
favorite.
crude. So
let's go with gold, because we actually had a good pop in gold today.
He loves gold.
Let's go with gold. So
All right.
Gold is a fun one today, because we actually didn't I say buy puts and buy futures last show?
You have been saying that for a little while. Yes, sir.
I was. You made your money back and then some if you did that again. And again, I can't give you advice or tell anything. I'm just looking at where it was. But, we have 25 handle change in strikes this week, 22 up, with most of that coming. Today's change is 34 in the front contract. So up 22 on the week. So significant move today in gold, right? I mean, serious stuff. Did you guys talk about this at all earlier today?
No, we did not. Actually, we did the show a different day this week. So we did option block yesterday. So you guys, you're the first one on to talk about it today. So have at it. Yeah.
So no, I'm just gonna. I like talking about it. We had Eric on. We talked how it was a little bit in the doldrums. Eric talked about how we could see a rally in gold. He said his paper was late, and then his paper came out this week, and lo and behold, we got a rally in gold. Rally again. We're basically up where we were trading, but at 3:00 last night we were trading 11.95, and today, right now, we're trading just under 12.30. And when we were talking last week, we were talking about being at the low end of the range, and that being a good time to really start to get in. And the vol was pretty cheap, so here we had a straight up move, and it sort of makes sense with what was going on in the market, but this is even a bigger move than I expected to see, because we saw a little bit of a push up until the open, and then a big jump. We got from 9 o'clock until now, we got almost a 20-point move. So I think that I'm not surprised, but I think the magnitude of the move, I was surprised. I thought it would be firm for sure, but we definitely got a big push up there. As far as any interest, I'll leave you to do the open interest in the volume stuff. I like, you let me play in my volatility space. We don't have a huge jump in the volatility today, but we do have we're seeing the 11s and 12s, which we haven't seen in a while. So we're up almost 3 volatility points in the 14-day November contract. We definitely got a bid to the calls, and the puts got a little bit offered. So, a little bit of a change in sentiment, sort of we went from being 3% rich at the end of last week to 7% rich on the calls. So that's a pretty significant bump up in difference there from the at the money to the 25 deltas, and the puts got a little bit softer. So, when we do get this, so I always like to see how long, if we stay up there and there's a new normal in terms of where we're going to range around. But right now, seeing where gold was, seeing where we are today, up at the 1230 mark, there's some other things you could potentially do depending on to maybe take into account that if the market firms up and we don't keep going south in the indexes, maybe 1200 has been where we've been trading. So you might want to start thinking about how I could take advantage of the futures trading back down to the 1200 area or below again. So there probably some opportunity there as well. So straddle, buying a call, selling futures, selling puts, selling futures, all sound like pretty good ideas right now.
And before I keep going on the metals, I lied when I said this was enough. This was the end of the equities, because we got our buddy, the flow master there, Mr. Schwartz from Trade Alert. He's listening live, and he just tweeted in with out in the S&P, the big S contract over there, end of month, Oct 31, 2,200 puts, paper buying 40,000 of those for $1.25 to open. Mr. Nick,
2,200 puts.
2,200 puts for $1.25. Even scarier, they're now trading $3. So this guy's already more than doubled his money in the course of a few sessions on puts that are 500 plus handles out of the money.
Which strike and which contract?
This is OC 30, end of month 31. This is in the SPX, 2,200 puts. So the big meaty contract out there. This is not SPY or something else like that. This is serious paper doing 40,000 out there. So yeah, if you're concerned, maybe someone else out there is as well, and they're putting their money where their mouth is. And at least for right now, it's working. But we won't be doomsayers here on the show. We'll continue going. Of course, if you're talking doom and apocalyptic stuff, that's always good for gold. As Mr. Nick alluded to, it has been a good week for the gold bugs. Finally got a little bit of a smile on your face. It's kind of been rough going out there in gold land for the gold bugs for a while. They've been waiting for a pop, and they got a decent one this week, up nearly 2%. Like I said, about 1.8%, hovering right around the 1230 level, 1227 or so out there right now. So back north of that 1200 level, everyone was kind of worried about. Nick kind of broke down the skew. That's one of the things I like about gold, Nick, is that, the skew evolves. The skew will swing, the puts will get bid, the calls will get bid, they'll both get bid. It's kind of nice. It's kind of fun if you're a skew watcher out there. Gold is a fun one to watch. It's one of the ones I talk about all the time. If people get bored with the varying degrees of equity skew, but it never really changes away from the investment skew, the metals are a good place to look, and some others where you get a little bit more of a skew evolution over time. In terms of what was lighting it up out here this week, if you said upside, you were correct. It was the 12 half calls in Dees that were taking the top spots. 11,000 of those. Worth noting, OI pretty strong out here, up about 2.5%, but nowhere near the 15, 16% we saw out there in the E-mini this week. So things are rocking in equity land right now. Nearly about a little over 11,000 going up on the 12 halves. Pretty much all of that today. 8,000 of that almost going up today. So the rest of that 3,000 and change kind of scattered throughout the week. Obviously, OI is not going to mean anything because all that paper is going up today. That was the big trade by a country mile. Then we go out to 1230 calls out here in November. So a little bit closer to home, a little bit more reasonable. In fact, 1230 is pretty much at the money now. Trading about 9,000 of those this week. Again, the lion's share today, 8,500 of that. So the rest of the week, kind of negligible. All today with today's pop really driving, in terms of gold, driving a lot of that paper out there. Then let's see really quickly any other fun ones. 1240 calls back to Dees, 5,700 of those. If you're looking for puts, you got to go down to the 11 quarter puts out here in Jan. The Jan 11 quarter puts, 5,600 of those hitting the tape this week. So it's not all calls all the time. And pretty much all of that is opening. So there is opening positioning. 11 quarter could be overwrites down there. We'll have to dig in a little bit to see. But there is some put paper to be found out here. You just got to look for it a little bit. So 1,100 puts out there in, June of next year, doing 1,000 and change. But, yeah, it looks like the big paper, Mr. Nick, is in the calls. I guess that's not too surprising. And it sounds like, yeah, your puts and futures, sir, looking pretty good out here.
Yeah, I mean, it's nothing other than that the range that we talked about and trying to buy cheap vol and looking for the possibility to move back in a direction where we shouldn't have been, where we were and we probably should be given where everything is, and maybe taking advantage of the opportunity if we continue to move lower, right? So that's all that ever is just looking at how vol is stacking up against where the futures are more than anything else. I think what I'm trying to figure out here is how, that's from last time. Okay, I got to look at that. I'm just trying to get a handle on the change in volatility here and see if it's measuring up correctly. But yeah, I think what we see here in the November contract, people were pretty disinterested in the upside until we got to that area, right? So there weren't a lot of call buyers until we started getting there and trading. So that's why I say I think it gets to the point where it's where let's see what happens over today, or we're closed I think, but tomorrow with gold to see if we move a little higher, or if we go back where we were. That's going to really determine how I think vol is gonna handle itself going forward. But I like gold, like you said, because there is some movement, and even when it's kind of boring, it's still active, right? Because the ranges are pretty good size. So that's why I always like talking about it because I have a penchant for wanting to be long volatility and scalp that gamma. So it's going to be one to keep an eye on over the next couple days.
Since we're talking goals and flights to quality and things, let's touch really quickly. We have, a comment here from R. Ray. He says, should I dump Bitcoin and then, pile into gold? Yeah, well, gold's looking all right. But I think he's kind of alluded to, a lot of people have been saying for a while here in the crypto space that crypto is the digital gold. It's the digital safe haven. And in times like this, crypto could be a place you could go. And it would insulate you from the big sell-offs. And what we're seeing is, not so much. Crypto, Bitcoin, of course, leading the dance to the downside, dropping over 6%. It is flirting with that 6,000 level again. Right now, the CME future is at 6,200, 6,195, actually off 350 out there in that contract. About 4,000 contracts on the tape, too. Remember, that's a 5X thing. So that's talking 20,000 coins there changing hands. A lot of paper and a lot of selling pressure. So, Mr. Nick, I guess the moral of the story is something we've seen before, where when things start hitting the hay, hitting the fan, everything starts to move together. And it sounds like, at least now, crypto ain't perhaps the digital safe haven that it once was, or maybe it never was, but people thought it was. Mr. Nick, would you concur?
Well, I mean, the timing of it, like we said in the beginning, if you looked at the markets last night after Globex was open a little while, you're matching up with the hammering of the indexes. The cryptos follow along. So, I mean, we have that cross correlation tool. We'll have to take a look at that and see how highly correlated the Bitcoin is to the indexes over this last, as we move through October. We'll take a look at the 30-day correlation and see if what we see today or last night is kind of in line with what we're seeing here in the Bitcoin chart. But the one thing you will notice, it got pounded and then it just sort of steadied out, and it really hasn't followed suit in the last couple hours, right? You see that the chart, at least on the Bitcoin real-time index on the CME site, it traded down almost to 6,000, back on up to 6,200, and it's really sort of traded around there all day long. And we haven't seen any sell-off in the last hour or any softness in the last hour like we're seeing in the indexes.
Yeah, it's so I guess it's followed initially, but maybe not so much now. So maybe there's some hope there for some of you out there who are crypto heads. Let's move on. Another product. Everything was lighting it up this week, Mr. Nick. Kind of just spin the old wheel on the old quick strike, and you can find a product that's moving, including our old friend, one of our favorites here on the show, Crude taking it on the chin this week. A bunch of stuff going on. As we're talking right now, the Crude hovering right around the 71 strike, off almost 5% here on the week, about 4.5% over 3.5 handles or so out there. So things not looking good for the crude bulls. If you like filling up your gas tank a little bit less expensive, then maybe perhaps you got a smile on your face. We shall see. It's kind of been a little bit of an interesting push-pull out there. We were talking previously on the show about things like the Iran sanctions, people pricing a lot of that in. We also had a lot of supply coming here. We also had a hurricane coming in and hitting the Gulf, which is one of the worst places for a hurricane to hit in terms of crude production. You have to shut down production. You could do a lot of damage to the rigs. It seems like in the initial blush post, I believe it's Michael, that the damage hasn't been extensive there. So the refining and production capacity is still intact in that area, which is always a concern when a Cat 5 or Cat 4 hurricane comes ripping into the Gulf there. And then on top of that, compounding that now, that ease of concern about that, which had also pumped up crude prices a little bit. We also have data coming of the American Petroleum Institute on Wednesday saying crude inventories up more than expected last week, climbing by 9.7 million barrels. That analyst expectations were 2.6 million barrels. That's a big difference. And we saw this morning EIA coming out with similar numbers, saying they pumped theirs, I guess due to the Columbus holiday. They're saying crude inventories rising to about nearly 6 million barrels. They were forecasting about 2.62 out there as well. So, and that was after an unexpected bump in stockpiles here in the U.S. of nearly 8 million barrels the week before. So all that means a lot of crude sitting around in our stockpiles. So down goes good old WTI as a result. So a lot of interesting stuff going on out here. Let me dive in really quickly and see what we've got lighting it up out here. I said we're at right around the 71 strike right now. Doesn't mean upside isn't lighting it up. In fact, it seems like upside is leading the dance this week to the tune of the 80 calls. The Nove 80 calls taking the number one spot by a pretty wide margin, 27,000 of those on the tape. Almost none of them today. 12,000 on Wednesday, 7,000 on Monday, 6,800 on Wednesday. A lot of paper in, about 11,000 and change that opening. So opening 80 calls that are going out in 6 days. Mr. Nick, would that have been your first guess for could be an overwrite? We'll have to dig in a little bit. But I don't know, would you guess Nove 80s as your number one WTI trade this week, Mr. Nick?
Yeah, that is an interesting one. And those all happened. But see, the sell-off started yesterday. A lot of that, 14,000 of it came in on Monday and Tuesday. So maybe there was some thoughts there. But no, that one is kind of surprising. You can't tell what people, we look at it and we see that number, and then we got to go back and see when it actually happened. So I remember I was watching some guys talk about where they thought what they were looking for from Crude, and a lot of them wanted to break 74, and I think that was on Monday. So now here's Thursday. We broke 74 over the last couple of days. So, I mean, they got what they wanted, and it definitely got softer after that. But those 80s probably had a trade earlier in the week before, when it looked, because when we talked last week, right, we didn't expect Crude to really kind of creep up all that much more from where it was. And it did actually move higher from when we were talking initially last week, right? So because it started out, where do we start it out? At the beginning of the week, it says we started out here about 74 and change. So, we moved up, and then now we're coming back and being soft here, but I'm sure those 80s traded before we started to trade down.
Yeah, that definitely seems to be the case. Maybe a little bit of eager optimism. Either way, the time frame was not too long on these bad boys. So whatever they want to have happen on here, that needs to happen in the next 6 days, which is interesting. I would not have expected that. That's why we like doing the show. It kind of sometimes shows us some weird stuff. Looks like, there was paper on the 75s too. Potentially 1x2s, but those were not enough to really line up on the 1x2 side there. So perhaps I'm being charitable here. Let's look at what else was lighting it up. Also, if that's not enough upside for you, Dees 82s lighting it up to the tune of 17, almost 18,000 out there as well. The lion's share coming on Wednesday, 13,600, about 2,000 of that opening. So it looks like a lot of back and forth positioning on that 82 strike out there in Dees. Dees, not as surprising, gives you a little bit more room to play, a little bit more time to play, right? So Dees 82s and Nove 80s are the big players out here this week. Let me just do a quick scan, as I like to do, for any funky strikes. Oh, yeah, we got one here, Mr. Nick. Dees 2019, we've got the 46 puts. Doesn't seem like too long ago we were flirting with around those levels. Now it seems like a distant memory, but someone's saying, no, we could be back there again next year, because they traded about nearly 8,000 of those this week. The lion's share on Monday, 6,300, pretty much all that opening. So a lot of opening positioning on 46 puts in Dees of 2019 this week, Mr. Nick, and 80 calls going out next week. I don't know if I would have guessed that combination this week, but that's why we do the show, right? That's why we find the fun stuff.
Yeah, well, and the thing about the 80 calls, right? We don't know if that's somebody selling them quite a bit, or that's always the one part that we miss, right? We don't have any color as to what direction is the initiation. Now, somebody's got to be buying them, obviously, but typically there's somebody who's just bid and gets hit if it's a seller, or gets lifted if it's an offer. So that part we don't know. But I'm guessing that when we traded up to 75 late Tuesday, I think it was late Tuesday, right? It was this week that there was some expectation that things could keep going, because, like I said, I think that the market moved up a little higher than people initially thought over the last couple of weeks. They didn't think we'd get to that 75, but we got to it, and maybe thought we'd keep going. But yeah, We sound like Citibank's prediction for oil price ranges between 46 and 80 right now.
Pretty much.
Strikes we're discussing.
That's how out on a limb we are. You want to hit any more, Mr. Nick, or you want to get some listeners on the show? What do you want to do? I'll let you drive
let's do some questions. That sounds good to me.
Sounds fun. Listeners always take us in some weird spots. And spoiler alert, they're probably going to do that again this week with a little bit of their futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to the show. This is your chance to sound off. Mr. Nick, I wasn't kidding when I said they're going to take us in some fun directions, which is why I like them on the show. This first one, this one cracks me up. This comes from Cab Mel. They say, oh no, oh no, did the millennials kill cheese? Are they coming for fluid milk next? And he included a link to, it's like a Bloomberg piece saying millennials no longer eating American cheese. And that's killing the product that are of interest to us. This article also cites a part for the 500-pound barrels of cheddar over here at CME that they use to make a lot of that cheese are selling at a record discount to the 40-pound cheddar blocks. Cheddar is the kind of stuff you eat maybe at, go to a fun party. Obviously, you cut up the cheddar, a little bit different beast than the barrels that they use to make simple American cheese. So they're saying the demand for the barrels dropping, the demand for the quality stuff, the other stuff is going up. We're at a kind of near record discount, apparently. Not a spread. I have to admit, Mr. Nick, that the block cheddar to barrel cheddar is not a spread I've been paying attention to. Is this one that's on your radar every day? You wake up in the morning, you have your cup of coffee, and you check your block cheddar to barrel cheddar spreads?
I am not, but it's funny that somebody brought up cheddar. I was in Wisconsin last weekend, and the cheddar cheese was just delicious. So that's when you said cheddar, all I could think about was how delicious the cheddar cheese was in comparison to Illinois cheddar cheese. Now that sounds dumb, but it was delicious.
Well, they do pride themselves on it.
Yeah, I did see that article as well about the. It's funny they were showing. They were showing. The Kraft American the slices as part of the little video that was along with the article. I'm sure that there's plenty of industry or product that the millennials are killing because they're not eating anymore. And for my question is, how could you not eat a Kraft American cheese? Grilled cheese, if it's handed to you, right? I don't care who you are, millennial or baby boomer or whatever else. I want my Kraft American cheese.
This whole conversation is making me uncomfortable, sir, because I'm lactose intolerant. So I can't have any of it. So it's just making me sweat. But it does sound delicious. But to the second part of his question, he wants to know, are they coming for fluid milk next? Yeah, this is why I like the listeners. They give us an excuse to pull up our old friend, the Class 3 milk options, Mr. Nick, which are lighting it up out here. On CME. No, I'm just kidding. Not trading a ton this week. Not a big week for fluid milk. Go figure. It's hovering right around now the 15.75 strike, 15.75 if you are a follower of such things. Looks like the vol coming off pretty extensively out here over the course of the week. So I guess vol in milk, Mr. Nick, moving a little bit of the inverse to what we're seeing through a lot of the other markets this week, where vol is through the roof. And in terms of OI, kind of negligible. So not a big week out here in fluid milk. And looks like 15 half puts, 15 puts, and 15 half puts are kind of where the action is. So maybe this guy's right. Maybe he's onto something. Maybe at least by this little bit of put action, Mr. Nick, I'm going to go out on a wild limb and say, yes, he is correct that millennials are killing fluid milk next. Are you on that train? I'm lactose intolerant, so it wouldn't be the worst. Wouldn't be skin off my nose if that happened.
Well, yeah, I think that's the fluid milk is probably not as flowing as fluidly as it used to, because I know in my house we drink a lot of rice and almond milk, and we used to drink lots and lots of fluid milk. So I'm sure that all that is true.
Yeah, so there you go. That's why I love our listeners. They take us to some fun places. Let's go here. Here's a more straightforward question here. This comes from Inlo. Inlo wants to know, is it only possible to exercise a futures option? I love when they put FOPs. It just cracks me up. FOP. That has the same month as the underlying future. So he says, if I'm long an April CL future, do I also need an April put option? Or can I exercise a May CL option on an April future out there? Mr. Nick, not a crazy question. We can get into some of the exercise mechanics in a little bit. I think we have questions about that coming up in a little bit as well. But if you want to lay it down for our friend Inlo about how if you buy a put in a different month than a future that you have, what do you have then, right?
Yeah, I don't know. That sounds like a trick question, but I don't think you can do that. So I think once you exercise, you exercise into the underlying, and you can do a spread to get out and switch which one you have. But I think you're stuck with what you got there.
Yeah, I think he thinks that he could maybe, like in his scenario, he says he could buy, what do you say? He said buy an April put option for an April future. Yeah, that'll work. That'll do it. If you buy the put option, and then try to exercise that, what do you got now? You got a spread, right? I'm assuming, but of course, if you wait by that point, April probably will be off the books anyway, so it won't really be that big of a deal. But short answer is, yeah, no, you're going to have differing positions. They're not going to be. If you want to buy and close and close out the actual underlying that you have, you need to do an option on that actual underlying. The other month's futures are different underlying. So, yeah, short answer is no. If you're okay with that, maybe you want a little bit extra time, that put will still protect you. It's still a good thing to have. It's just when it exercises, it won't, and it keys off a different future, so it won't move directly with your future. But if you got a May put and Crude takes a bath on your future, you'll get a lot of protection on that May put. It's not like it's a bad thing. It's just not going to be. They're not 1-to-1 in terms of how they key off each other. We got this guy here, Nick. Is kind of a funny one. I think it's a reformed trader just sent in a screen grab that just cracked me up. He says a lot of people are popping Tums today, and it looks like Christian Bale's character from the Big Short movie. You ever see that? And he's kind of just passed out on the floor with a bunch of papers around him. So I just thought that was a funny image. I liked it. But I think he's probably right. A lot of people were popping Tums yesterday and probably popping some more today. They were probably celebrating for a little bit earlier in the morning, and maybe now they're washing down that champagne with some Pepto a little bit later. What do you think?
Yeah, I mean, I'm watching it now. Even since we've been on the show, we went from being down 50 to down 20 in the ES. So I mean, we're basically have a mini retracement on our hands.
So it's a 30 handle rally. So that's what it is. Bulls should be excited. We rallied 30 handles. There we go.
30 handle. I mean, it's pretty good.
We talked up the market on the show here. That's what it was.
Yeah, I mean that's so yeah. That's why you got to watch and not get too. There's nothing fundamentally wrong with anything in the economy right now, right? I mean, outside of the fact that people will start to make the argument that the rates, we got ahead of the rates in terms of the inflation stuff, and today the number came out and said inflation wasn't quite there as much. So, we'll see. What I'll be curious, we'll have to watch going forward is to see, and we didn't really look at it, probably should take a look at it before we get off the show, is the Fed Watch tool, and see if after the inflation counter was in check this morning, if the probability came out at all from a December hike. And let's see, there's the November meeting coming up here, and you know what? The December we did. Let's compare this. So because that's kind of, well, not really. So my point is nothing's really changed. We got a little bit of a sell-off. There wasn't some tremendous bad news that came out. The inflation's in check. I think the Fed's still going to do something in December because it was pretty well planned. But, that's why a couple days doesn't make a drag on the market. We got to see how it goes the rest of today, tomorrow, and then how it starts over into next week, right? So We'll see. My Tums, although I will say my stomach did hurt when I saw the market down that much, to be honest.
Yeah.
And I did a Prilosec, not a Tums.
Oh,
so
okay. Well, I guess to each their own. Uncle Mike, wherever he is out there right now, who's I know is a permabull and has been on the show before, he could smile a little bit with this recent turnaround out here. All right, let's see. We got time for a couple of more. Comment here from Olive Trader 2. I know he listens. He listens to the show. He's putting in a vote for the Thursday show here, Nick. He likes it. He says, I like the Thursday show, actually. I was supposed to be downtown, apparently, but he couldn't go. So he's listening to our show instead. So there you go. So people as a vote there for the Thursday. So not just you and Sean like the Thursday, but apparently some of our audience do too. They were, I guess Friday wasn't working. Thursday, they like it. What do you think?
Yeah, no, I think he or she, Olive Trader. I wonder if that's olive or oil, to play on oil, olive oil trader too. I don't know. But that was that comment came after our show last week, so that was good. We always appreciate if people are. I'm always surprised and pleased when people are listening live, because it means they're paying attention. So that's good.
All right. Since we were talking exercise before here, Mr. Nick, I guess we could wrap them up here on these two related questions here. First one from Sam Harris. It's the longer of the two. He says, this is the question for TWIFO. All right, well, you sent it to the right show, so you passed the first test. He goes on to write, hello, Nick, Mark, and Sean. Fun program. I particularly like the research guests since they usually bring up topics that are new to me. Well, you're clearly a man of discerning taste there, Sam. Keep listening. He goes on to write, I was talking with a friend recently about exercise and settlement. And he puts in parentheses, nerds, I know. Yeah, I don't hang out with my friends usually and talk exercise and settlement, unless maybe they're on the back office side, in which case I just try to avoid them as people. No, I'm just kidding. He goes on to write, he brought up an interesting time frame to exercise an option when it goes in the money and the spread is simply too wide. Exercise may actually be the cheaper option. And then we got a related question here from Ms. Ander. Says, why exercise a future option early doesn't seem to make much sense. So kind of related questions. We had a similar question, I thought, a couple of weeks ago about which products you can actually do American style option exercise on, which is, of course, that's what you need to exercise early, right? It has to be American style, where you can exercise at any time during the life of that contract. You get the European style, guess what? You're out of luck. It only happens at the end of that contract's lifespan. And that, unfortunately, is the lion's share of the contracts that we're talking about here. So these are somewhat theoretical, but you don't really have the same uses. So yeah, exercising early is not really a scenario you can kind of encounter that often. Obviously, in the broad option space, if you have an American style option, the one time you really want to do that is for capturing dividends. That's kind of the one time it really makes sense to exercise a call early if you can maybe get that stock early and get the dividend, and the dividend exceeds. We won't go into all this put call parity stuff. That's for a show like Options Boot Camp. Check that out. But long story short, that's pretty much the only time it really makes sense to do it. Otherwise, you're right. You're kind of just giving up all that time decay. It makes more sense to sell it, unless you're in one of these weird scenarios that Sam mentions, maybe an illiquid, deep in the money option, and the spread for whatever reason is crazy wide, and you have the option, pun intended, to exercise it. Then maybe you can split the midpoint there and get maybe a better fill by exercising it. But these are all kind of theoretical scenarios, Mr. Nick, because you can't really exercise most of these products early anyway, right? But I don't know if you have any thoughts here for Sam or Ms. Ander, who are all dancing around the exercise issue.
Yeah, I mean, there's still American options out there. I know a lot of the FX have switched purely to European stuff too, and I never thought of what Sam Harris said about the spread being too wide. That is an interesting conversation.
That was a fun one. He and his friends are definitely nerds, but I appreciate the point.
Yeah, they might. I wonder if they were outside when they were talking about that, because that would at least be good as well. So get some sun while you're discussing the exercise and settlement. But that is actually, I like it. It's kind of a clever way of thinking about it. As far as Ms. Ander, I think, like you mentioned, we did talk about this a little while ago. A futures option, the Eurodollars and the Treasuries, they are American style options. So we talked about when people do boxes and stuff like that, I mean buying and selling strikes to the call spread and put spread, and what you end up doing, or you do a deep end call spread or a deep end put spread, and you exercise your long option in order to get to basically, you just are washing the options that are trading at parity. You're washing those away. and then you let your short options go because you are now short premium, and the intent or the hope is that you don't get exercised on all of those, so you get a chance to be lending money at whatever the short-term interest rate happens to be. And like we mentioned a couple weeks ago as well, that used to be a play when you could actually get money short-term at a decent rate. You did that, and you hoped that you can get tens of thousands of dollars at some percent interest rate that was greater than 0.0025, like it is right now, I believe, in the short-term lending. But that would be one of the reasons, and like you mentioned on the equity ones as well. That's a big part of that whole equity option education, is when you, the only time you should be exercising, as you mentioned. I believe there's something on the put side as well.
Oh, that was loud.
That's
yeah,
okay.
it's funny. We just did this on the show a couple weeks ago. Someone wrote in with a similar question. I had the list up in front of me. I can't find it now, of exactly which ones you can still do American exercise. Most of them are in the equities these days. Probably makes sense as they line up with some of the other products that are fungible out there. But spoiler alert, there aren't a ton. So this is kind of more of a thought question than anything else. But still, we like the thoughts you guys put in our brain, because sometimes they're weird and crazy, like Sam's, or the guy who was scared of cheese dying, or all the other fun stuff that you guys hit us up. This is why we like you guys. You guys take us in all sorts of crazy, interesting places. And I do like that idea of, exercising for some deep in the money work. For some reason, it's super wide. Obviously, it's not a very liquid product, so you have a lot of caveats that go into that. But if that's the case, and you have an American-style product, maybe that is an option. It's not one I've sat around talking with my friends about on the weekends, but perhaps I shall ponder it further after the show. It's an interesting one. Either way, Mr. Nick, that music means we've come to the end of another epic journey. What a journey it's been. We talked crypto, we talked gold, we talked crude, we talked a lot of equities, talked vol across a wide variety of products, even got into some fluid milk, our old friend. It's been a broad, far-ranging conversation. That said, Mr. Nick, what is cooking these days over there in the land of the old striking of quickly?
Let's see. So like I mentioned last week, some new tools coming out fairly soon. Not much we could talk about just yet, but we did release to a limited audience the ability to have tabs within QuickStrike now, so you can have multiple windows open at the same time within the app, so you don't have to click around so much. You can have up to 10 tabs available, so you can open up a product per tab, or you can have TWIFO open in one and the vol curves open in another. So that will be eventually released to the professional audience in the near term, but it's exciting because now I find myself can't live without it. So looking forward to it.
There you go. You guys know the drill. If you want to learn more, maybe you want to kick the tires and light the proverbial fires, then quickstrike.net or bantix.com are the best places to go. Then you could log in, try out the tools, the pro version, the really good stuff, the heavy lifting stuff over there for yourself, which quite frankly, if you're interested in all this stuff we're talking about here, then I don't know. If you're not using it, I honestly don't know what you're using. Maybe you use a little graph paper, one of those old TI-80 calculators, and perhaps an abacus, and that's how you're doing the work. Either way, though, it's the place to go for a lot of this kind of stuff. Quickstrike.net, bantix.com to learn more. And, of course, our friends over there at Russell are running around. A lot going on in their neck of the woods, so I look forward to getting Sean back on to talk about it. I do believe we are going to be doing a special episode next week, Mr. Nick, from the Futures Industry Association event here in Chicago. So we're going to be doing a little bit time change next week to accommodate everybody's schedules. But we'll be the same day. It will be Thursday, so we're not going to throw you that much of a wrench. But I think it will be a little bit earlier. So look for us on a little bit earlier next week at 11. And on behalf 11 Central, of course, 12 Eastern. And on behalf of Mr. Nick and Sean and our friends over there at CME, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in such great and varied questions. Keep them coming. We love to hear from you guys. And we'll see you next week for more of This Week in Futures Options.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.